Everybody leaves their business. We leave it by death, we leave it by disaster, or we leave it by design. And so if an owner leaves by death and it's unplanned, well, a lot of value can evaporate. I heard a story of a guy who owned a construction business and he was in his 50s and he met with his estate planning attorney and they were updating his estate plan. And the attorney did a little exit planning and asked him, he said, hey, have you ever done an exit plan? Have you ever thought about your exit strategy? Oh, I plan to work another 10 to 15 years. I'm really not worried about it. They go, okay. Well, about 6 months later, the attorney gets a call from the CPA. The CPA says, hey, I'll let you know, so-and-so passed away. The attorney said, man, I hate to hear that, but I know he had a really good estate plan. He goes, yeah, he did, but the estate's bankrupt. And he goes, you're kidding.
This is the Bender CFO Podcast, where we empower business owners to gain financial clarity and maximize growth.
In this episode, I sit down with Derek Moffitt, certified financial planner, certified exit planner, to talk about one of the biggest financial challenges business owners face, exiting their business successfully. Derek, he shares key insights on business owners and why they should start planning early, how proper financial and operational systems can maximize business value. We discuss common mistakes, such as treating their business like a personal piggy bank and not having a solid succession plan. There's different types of exit strategies. You could sell to a third party. Maybe it's just passing the business on to another generation, or transitioning key employees doesn't necessarily mean selling out. You could still be an owner, but you're trying to have other people manage the business and you're not in the day-to-day operations. All of that is considered part of exit strategies. With the largest transfer of wealth in history underway, business owners need to be intentional about their financial future. If you're a business owner thinking about the next step, this episode is packed insights to help you plan your exit by design, not by default. So listen now, start securing your future with my interview with Derek Moffitt. Hey, welcome everyone. I have here today Derek Moffitt. He is a principal and financial advisor at Moffitt Financial Strategies in Fort Worth, Texas. Derek is dedicated to helping families and businesses plan for their future, protect their assets, and leave lasting legacies. Derek's journey into financial services began after a successful tenure at the San Angelo Standard Times, where he led for a multi-million-dollar department. His passion for assisting colleagues with their 401k decisions sparked his transition into financial planning. Today, as a certified financial planner and certified exit planner, he specializes in comprehensive financial planning, investment management, and retirement strategies, providing tailored solutions to meet each client's unique needs. Beyond his professional achievements, Derek resides in Burleson, Texas with his wife, nearly 3 decades, and their family. As an adoptive family, they actively support adoption-focused groups and are involved in local nonprofits, the Rotary Club and their church. A nature enthusiast, Derek enjoys fly fishing and spending time on the water. His life mission is to learn, share, and grow as a human. So please join me in welcoming Derek Moffitt.
Thank you, Shane. I appreciate the opportunity to be here, visit with you today.
Yeah, that's good. We got to know each other over the last year. And one of the things that kind of sparked, I guess, my interest is just you and your interest in, you're not just, you do financial planning and you do help with the individual investor and grow for retirement, but you do have a heart for working with businesses and understanding where they are right now. And many businesses would eventually want to exit, and you actually got the official certified exit planner to your name and certified financial planner. So you have that knowledge and how to, because there's so many things that business owners can do today. And you don't want to just decide and wake up one day you'll sell your business, and you want to have more of a plan to it.
Absolutely.
So,
and I think, that's what a lot of business owners do. They think, okay, that's it, I'm ready to be done. Often they don't achieve really the maximum that they could or quite the experience that they want to. And so we help them plan ahead for that. Their business is their largest asset on their balance sheet. So we want to make sure that they handle that transition really well.
Tell me a little bit more what inspired you to do what you're doing today.
As you mentioned, early in my career, I was an advertising director at a daily newspaper. And in those days, that was a great business to be in. For our listeners under 40, they probably don't know what a newspaper is. But in those days, it was a great business to be in. You were involved in the community. I was involved in product creation and marketing and launching new products, and just got a really good operation sense of business and how it worked. And I was very fortunate to work with a really strong team, a senior management team that really involved me at a young age in those key business disciplines, if you will. And so later got into the financial planning business, started there. And as I grew my practice, I began noticing that my business owner clients really did not have a strategy on how to deal with their business. And that was their largest asset on their balance sheet. And it was their most important asset. And they really didn't have a plan for that. And I didn't have the expertise to really advise them on that very well. Did a little research, became a certified exit planner, as well as a certified financial planner, and then decided this is what we're going to do. We're going to really help these business owners figure out this important piece because it is most of their wealth, most of their income, their life, their blood, their sweat, their tears is all poured into this business that they spent their life creating. And we want to help them steward that transition really well. So it really came out of my experience in the newspaper, learning about businesses, learning how to work it, how to run strategic planning, budgeting, cash flow management, all those things. Then married with my financial planning experience and just seeing an opportunity and a need and trying to do the best we can to help address them.
Yes. I definitely, as a fractional CFO and working with small businesses, that's a common thing that we talk about because it's most of the time with business owners, they are putting all of their retirement, nest egg, everything into their business. Now, we could have a debate on whether they should do that, or whether they should have a retirement plan or something. There's a lot of tax benefits to that, of course, but for the most part, that's what they're focused on, and I totally understand that. But business owners, that makes sense, and many times they have multiple businesses, so they're just spreading it out that way.
Mhm.
But tell me, do you see any certain trends that business owners should pay attention to that are good advice that you would give them?
I think probably the biggest trend is we have a ton of baby boomers that are getting into that retirement age. They're in their 60s, even their early 70s. And so we're sitting on this, we're going to have the largest transfer of wealth in history happening here over the next several years. And with that, the largest transfer of businesses. And, it's the rags to riches to rags in 3 generations. The founder of these businesses often come from nothing and they make a great life. They build a great company. They pass that on to the second generation. The second generation does okay, passes it to the third generation and they ruin it. And so I think this shift of wealth really requires some advanced planning and being really intentional with training and developing that next generation to have the skills and the competency and the character to really run the business. And that doesn't just happen. That happens when you've got to be really intentional about that. So I think that's probably the greatest need is making sure that business owners have a plan and that their plan includes developing their people to be successful.
So your exit strategy that you focus in on isn't only the exit strategy of you're trying to just sell the company, come out with many millions of dollars, and then throw that into some kind of investment account. It could include a situation where you're trying to transfer it to another generation, to somebody in the family or something like that.
Yeah, we work with clients that want to sell to a third party, clients that want to transfer to the next generation, their children or their family, or even just their key employees. We can help them design plans that will do any one of those scenarios. It might be selling to an employee owned like an ESOP plan if they're large enough, or an employee owned trust if they're not. It could be some sort of employee owned entity as well.
Okay, it's good to know. What are some common mistakes that you see growing businesses make, or what are ways they can avoid those mistakes?
I think the biggest one is probably not treating the business like a business, treating the business like a personal big piggy bank where they don't have really good books. They don't have really good records. They don't have any systems and processes. They just take money when they need it. So all those type of things devalue the business. And so it makes it where it's not as attractive to a third party buyer. It may be difficult to get the financing needed to make that insider transfer sale complete and have it work. So probably the biggest challenge is not really running that business like a business and treating it like that personal piggy bank, which costs them probably millions, a lot of times millions of dollars.
Yes, that's a common
You never see that. I
issue
know you
that
never see that.
I see, especially the smaller ones. Usually,
Mhm.
I focus on businesses. It can be generally 1 million in revenue,
Yep.
million in revenue. Typically, by the time people are getting in that 5 to 10, they've stopped a lot of it doesn't always happen, but they've stopped a lot of where they're mixing and matching the personal
Mhm.
funds in there. But yeah, it definitely makes sense. And sometimes there's a strategy to put as much in there to lower your taxable income, but that just lowers your EBITDA which therefore is a big factor in obviously the valuation of the company. And you got to figure out how to strip all that out. And that gets real
Right.
hairy.
Right.
For the last 3 years, the client was like, can you go back in the last 3 years and strip out all these weird expenses? And you're like, if you just do the accounting and finance is very clean cut, it makes it a whole lot easier. Not very easy to go back 3 years on that kind of thing.
No, it's not. And it gives a buyer more confidence in the numbers. The more confidence they have, the more they're going to, if they're concerned about those numbers, they're going to discount that in their price they're willing.
Yeah, totally get that. Yeah, this kind of leads me into kind of my next question, but part of the point of this series is that I really think is highly valuable to have different advisors, different people to come and help business owners be successful. Even myself as a fractional CFO, I know like I'm not going in that area. I'm pretty good at understanding financials and providing analysis and provide forecasting and doing some financial strategy, but then bringing those people in that are experts in those areas. And what do you feel like what makes partnerships with financial professionals successful for you?
I think it makes it successful when one, everybody has maybe some shared values. We're all working together at the end of the day for the client. We all respect each other's area of expertise. And when it comes to tax, I often say I'll notice what questions to ask, but I don't know the answer. So I want a tax attorney or a CPA that really understands that well. And so when you have professionals that are experts in their lane, and they respect the lane, they stay in that lane when they're working with other professionals. That usually makes for really good collaboration. And I think at the end of the day, the client gets a much better result.
Yeah, no, I totally get that. Yeah, I'm the same thing. Always tell people I am a CPA, but I know about enough about taxes to keep me dangerous. I passed the CPA exam. That was 20 years ago or something. We know how the tax law changes all the time.
Changes every year. Yeah.
So you need a tax professional, somebody who understands that strategy and even the selling components of a business and exit strategy. And then of course, what do you do with the money after that point?
Right.
I mean, I'm like, oh yeah, generally I can tell them some investment vehicles, but there's so many ideas there's so many things that you could set up where it might be tax advantageous to do it this way, or just obviously depends on whatever their longer term goals are and the legacy. There's so many variables. And so I'm like, do that either. That's why you need this financial advisor and an attorney, and you need a tax CPA. And I was on a long list as we're going through this interview series. I'm going to be interviewing different professionals in different arenas. So yeah, if you were just like, and this is more of a business question, as you're meeting with business owners and you have your own, I forget what the name of it is. I actually have it over here. A book where you basically do the analysis.
Insight report.
Business insights report. Yeah. So you take the information from the business and then you put it through the system, the software, and this analysis, and it gives you an insight report.
Right.
But what are some key things that you see that automatically, either that or yourself, that you suggest would help improve their financial strategy so they can grow?
A lot of it is, well, sometimes, especially with those larger size businesses, they'll have pretty strong financials, but they may not have very strong operating systems or non-financial operating systems. So while they've got a good P&L statement and a strong balance sheet, they don't have a good budgeting process or a good cash flow management process or even forecasting. They may not have a defined leadership team and development plan that helps their leadership. And I think what really adds value to a business at the end of the day is a real strong leadership team adds probably more value than anything else. And that's because an investor or a buyer coming in, if you can take that owner out of the business and that management team can run that business successfully without them, that's really valuable to an investor. And so what that report does is it will uncover what they have that works, like in the sample that I gave you, which was a real life sample. Their financials were great, man. They were bankable. They had A ratings, a credit worthy. Everything was strong. Their operating systems, they didn't have a budget. They didn't have forecasting. They didn't benchmark against other businesses like themselves to see how they were doing. They didn't have a management training development program to really train their management team to run the business without them. All of those things get uncovered as well. And then you can help coach the owners through a process of putting those systems and processes in place that will take that business to the next level. And a lot of times add sometimes millions of dollars in value
Right.
to them by just doing some really simple things.
Yeah, that's kind of amazing when you see that. So, and I
Yeah.
remember like in the insights report, you even have there's different viewpoints on valuation depending on whether it's private equity or explain the different types of valuation that someone might experience. Because a lot of people think that their business is worth a lot more than it is, or
Yeah.
it just depends on the buyer on
It
what it
does.
would be.
Absolutely. So you might have an insight. On the low end of well, let's say this, maybe on the lowest end of the scale, we're going to liquidate and walk away. And then the value really is whatever hard assets, if there's real estate, if there's building, if there's equipment that you can liquidate and sell, walk away, close the business. And that is an exit strategy. I've got clients, that is their plan. So we plan accordingly. The next level up on valuation probably is an insider sell, where I'm now going to transfer to key employees, or I'm going to transfer to other groups. So selling to insiders is going to have a discounted because typically you're going to use the cash flow of the business to finance that purchase. And you're not going to sell it to as high as you would say a third party. And really, sometimes people think I want to make as much money as I can, but often that's not the case. A lot of times I have owners that preserving the culture, the legacy of the business, preserving their role in the community is more important to them than getting millions and millions of dollars out of that business. So what we work with clients on is, one, who do you want to transfer the business to? When do you want to exit the business? And three, how much after-tax money do you need out of that business to be financially independent when you exit? And so if they're able to exit and be financially independent at a lower valuation, but accomplish these other important goals, that's a viable exit strategy. A lot of business owners really want to protect their employees, their family, their communities, the work that they've created versus selling to a third party. Then on the valuation scale, if you sell to perhaps a friendly competitor, maybe you have another person that's going to buy the business to run the business themselves, you might get paid a little bit more than that internal sell. Or if you sell to what I would call a strategic buyer, that may be like a larger regional company that's in your same industry that now is going to buy your business because they want to get into a certain market or they want to expand. Warren Buffett calls these kind of bolt-on businesses when he talks about Berkshire Hathaway. So they're businesses that want to be in your business for a particular reason. And so we call those strategic buyers. They're going to pay a little bit more of a multiple. Private equity, which is really looking to buy that business, take it public, or grow the business and then sell to another private equity company, would probably be the highest level multiple. Of course, then if you go public, that's another, always IPO, and usually you get paid the most, but very few companies ever.
Yeah, yes. Yeah, I know that I'm in a situation where we're talking about doing a strategic buy opportunity. So it makes sense in that scenario. If you can find a buyer that's already have the infrastructure and the marketing and sales and administration, and it's really just, I just need to get the revenue and the sales and the customer, effectively the gross margin or whatever. And that just, it's bolted on and becomes much more profitable for them.
Right.
Versus being separate. So that makes sense. I appreciate that. So is there anything else about the business insight report? What do you do with that report? What's your steps to help businesses? And then after that, what do you do with it?
Yeah. So step one is we'll work with them, which is quite a process. We gather a lot of data in that process to really understand the business. We produce that report. And usually that's a separate engagement in and of itself. We get that report done, then we sit down and we look at it together. And then a client can decide to hire us to walk them through a step-by-step process to kind of address all of those issues. And in that process, we're really going to create the exit plan, whether that's going to be to sell it to internal employees or to family members, or whether that's going to be to eventually take it to a third party and sell it there. We're going to outline the plan, begin working on the things they need to have kind of in place and in order to make that transition successful. And that can last another 12 to 18 months, that particular engagement. It's also in that period that we're going to engage other advisors as well. So for example, I'm going to recognize in that plan, you need financial operating systems, but I'm not going to put that together for you. So we might recommend a fractional CFO like you that would come in and actually do that work to put together the piece. We would recognize the need for usually estate planning, updating estate planning work, and we would identify that and work with their existing attorneys if they're able to. If not, we can refer attorneys that come in and put together that estate plan. One of the key things in that process, and this is probably, I think, one of the most overlooked necessities in a business, is making sure there's a business continuity plan. So if something happens to the owner, We say, and we have a podcast, the Leave My Business Well podcast, and we say everybody leaves their business. We leave it by death, we leave it by disaster, or we leave it by design. And so if an owner leaves by death and it's unplanned, a lot of value can evaporate. I heard a story of a guy who owned a construction business and he was in his 50s, and he met with his estate planning attorney, and they were updating his estate plan. And the attorney did a little exit planning and asked him, he said, "Hey, have you ever done an exit plan? Have you ever thought about your exit strategy?" "Oh, I plan to work another 10 to 15 years. I'm really not worried about it." They go, "Okay." Well, about 6 months later, the attorney gets a call from the CPA. CPA says, "Hey, I'll let you know, so-and-so passed away." The attorney said, "Man, I hate to hear that, but I know he had a really good estate plan." He goes, "Yeah, he did, but the estate's bankrupt." And he goes, "You're kidding." And what happened was there was no continuity plan in place. So his key employees didn't know if they were going to have a job. And so they went out, they had families to take care of, they found other jobs. And the wife ended up with a $2 million life insurance policy, but not enough money to really take care of her at the standard that she was used to living at. And the business defaulted on everything. And then there were lawsuits, and now the estate was bankrupt. And having in that ongoing process, having a business continuity plan, that's one of the key things will help people develop, so that in the case of death or disaster, partner breaks up or divorce even, that business can thrive and go through any type of transition.
Oh yeah, that kind of stuff it was scary, or it just makes you sad when you hear
Yeah.
that. But I can imagine in your situation, you probably hear things like that because you're handling the full picture of the
Right.
financial and the
Right.
personal part, and all the most people, it's
Yeah.
all the way to death. That's they want their financials in they want everything to last their lifetime. So you're going to
Right.
experience that. Yeah, I appreciate that insight. Pardon the pun with your
Yeah.
insight
Yeah.
report. Yeah, just one little last question to ask people: what kind of motivates you daily in the work and what you do? What excites you in your work?
I really love working with our clients and seeing them accomplish those goals that are so important to them. I met with a client just recently. Her husband had passed away years ago, and she is very charitable minded. And so we mapped out a way for her to give her wealth and to causes and people that she feels. And that's exciting. That's really exciting to help people do what's important to them. For other clients, it might be transitioning that business to the next generation and that being successful. It could be paying for grandkids' colleges, it could be traveling the world. It doesn't really matter. It's a lot of fun to help people take these ideas and these dreams that are in their hearts and help them get a strategy on paper, and then help them fulfill that strategy and live the dreams that they. And that's just very enjoyable. And in the process, we get to work with some amazing. I'm shocked every day at and grateful for the quality of clients that we are able to serve and take care of. And they do some amazing things. They've got amazing businesses and families and communities that they serve. And it's really a privilege. It's an honor.
All right, Derek, it's been a pleasure just talking with you, understanding a little bit more about
Yeah.
what you know and you do have a very versatile understanding of the whole financial picture, and especially the business owners, and how that can play out with other generations, with exit strategy, ultimately with their own retirement, just being able to hit all of the financial needs that or desires that they want. So I do appreciate that time, and that translates into a lot of areas. And I appreciate your membership in nonprofits and working with them, your church, and all that means a lot to me.
Thank you.
Also.
Thank you.
So you have a great day, but it's good talking with you, and
You
thanks
too.
a lot
Thank you, Shane.
for
It's been a
joining me
pleasure.
today.
Yeah, it's been a pleasure. Thanks.
Thanks so much for listening to the Bender CFO podcast. Help us out by subscribing on YouTube so you don't miss another episode, or listen to us on Spotify and rate us 5 stars so more people can get this content to help their businesses grow and be successful.